Hi there, welcome to Market Call. For the next half hour, David Burrows, President, Barometer Capital Management, takes the calls. His topic, North American large caps. Great to have you here.
Good to be here.
Let me put those numbers up on the screen. Toll-free 1-855-326-6266, or you can send an email to marketcall@bnn.ca. You know, our colleague Francis Hordelsky just emailed us and said, how much more of this can we take, this volatility?
You know, I think it's very, very tough on investors. Obviously, it's been a really difficult couple of weeks, but there's been a lot of news that's been fueling all this. You know, one of the really interesting statistics, though, that I saw today is that despite the volatility last week, bulls went from 47.3% to 46.2%, and bears didn't tick higher. So I do think that there is some complacency in this market, where people are assuming that things will ultimately go higher, and at some point they will. But I think that there are some real risks in the market right now.
What's the main risk?
Well, you know, the obvious risk is that when you've got employment not ticking up, and you've got manufacturing ticking down, and when you've got interest rates basically at zero and still not having an impact, it's a concern. And it's been the weakest recovery since the Second World War, despite the fact there's been trillions of dollars spent. And I think that there is a growing lack of patience with equity investments, and so there just aren't the buyers standing in the wings ready to step in at this point.
And against the backdrop is the fact that we did see the S&P 500 producing no return for a decade. I mean,
right,
that gave people off right.
Well, and actually it's a really important point because there have been several periods over the last 200 years where you had a big long run-up in prices like the 80s and 90s, and after each one there was a period of 15 to 20 years where through a series of cyclical advances and declines, equity interest was washed out and valuations got back to very reasonable. Now we're 10 years in, and investors have seen now this is the third significant decline that they've faced. And as time goes by, you can see it. The interest is in yield at this point. It's not in stepping out and looking for capital appreciation. And that's the problem. Now, over time, that volatility should slowly wash out as interest washes out. But I think you have to focus on what people care about, and that's things that generate yield right now.
We're going to be right back with David Burrows of Barometer Capital Management answering your questions on North American large caps. The number 1-855-326-6266.